talking to a couple of companies, this time from the hospital space. Shalby is in focus after the company signed an agreement with Divine Super Speciality Hospital in Ranchi. The hospital will have a capacity of 60 beds. This is going to be via franchise model. To discuss this and more, we have Shanay Shah, who's the president of Shalby, joining in now. Shanay, hi, welcome to the show. Well, if you could just start by giving us more details of this agreement, this franchise operation that you've started in Ranchi. What is the revenue share that we can expect, and what is the revenue potential that you expect from this 60-bed hospital in Ranchi?
Sure. Good afternoon, Nikta. Thank you for having me here. So, it's a good deal for us because it's a location where we currently do not have presence. It is one of the 30 shortlisted cities where we do want to set up a franchisee, and in fact, it is a 100-bed hospital where 60 beds are already operational. So it's a decent-sized facility for the city of Ranchi, very well located, and the details of the deals are as such, where we are basically going to be managing these beds, and the entire investment is basically made by the local investors and doctors who are partners, and we will be doing a top-line revenue share. So we have a higher single-digit kind of revenue share that will kind of impact our P&L.
Okay, so Shanay, can you give us some details? Since 60 beds are operational, what has been the financial performance of this one so far in terms of revenue, margins as well? Is it profit making?
Yes, it's a relatively new hospital. Basically started about a couple of months ago, and they wanted an expert to kind of come in and manage the hospital for them. So essentially the way it will work is it's a multi-speciality hospital. So it has all the specialities. They're very big in rheumatology and ICU and orthopedics at the moment, and they're also willing to build on some of the other specialities where we will be helping them. As I said, there will be no investment from the side of Shalby from the point of view of working capital or capital investment or anything of that sort. It will be a pure revenue share, and in this year we expect it to do about between 12 to 15 crores of revenue. But it has the potential to do around 60 crores over the next 2 or 3 years.
Okay, all right. Just wanted more details with regards to your plans to expand via franchisees. You have indicated that you would look to expand to around 50 operations or 50 units via franchisees. When will this take place by, and which are the geographies that you would be looking at? Would it still continue to be tier 2? Would it still continue to be multi-speciality?
Sure. So, look, it's going to be a mix of metros, tier 1s and tier 2s as we see it. And we have shortlisted 30 cities. It's a long list, but essentially, these are all state capitals, metro cities, as well as the tier 2 cities of those particular states where there's a decent size of population. And essentially, yes, the timeline that we see, all these operational would be around 4 to 5 years from now. We already have 5 operational, and Rajkot is the other one which is already signed, and it should be operational in this financial year.
Okay, so next 4 to 5 years is by when you're planning 50 franchise hospitals as well in connection with your own company. So tell us generally what is the occupancy looking like right now in Q1? How is it, and how much of it was aided by international medical tourism?
Well, the quarter has been pretty good for us in terms of how we are growing compared to the previous quarter and also the same quarter a year ago. We are on the lines to kind of cross 1,000 crores of revenue in this year across all our 3 business verticals with a decent 20% plus kind of EBITDA margin. And essentially, we are confident that the implant business also will be positive in this financial year.
Okay, the implant business will also be positive in this financial year. More details on that, if you could share with us, Shanay, because you've done exceptionally well in the implant business. Your revenue is up around 3x in FY23 to almost 100 odd crores. So what is the run rate that we're expecting in terms of growth and revenue when it comes to the implant business in FY24? Are we expecting a scale up of around 2 to 3x or that kind of run rate?
Well, we already have done 3x from FY22 to 23. And we do believe that in this year as well, we will see at least a 50% growth from the FY23 numbers is how we see it. The products are taken very well by surgeons in the US and India, where we are currently marketing the products. Some of the marquee hospitals in Mumbai, Pune, Delhi have already started using these products, and they are very happy with the clinical outcomes of the product. So, yes, a long runway for us, but yes, we are basically targeting, as we've earlier spoken about, $100 million over the next 5 years in this business, predominantly coming in from India and the US.
Okay, Shanay, just to follow up on that, since you are so bullish on the implants business, but generally also you did see a lot of traction in the international medical tourism that grew more 100% on a YOY basis in terms of revenues in FY23. Will you be able to better that? What are the trends looking like right now? Any ballpark that you have in terms of international revenue targets this year?
Well, look, we are already doing a lot of medical tourism work in, our Ahmedabad centers. Some of the other centers, because of the locations and international flight connectivity, it is, slightly on the lower side. But having said that, yes, we are trying to forge a lot of partnerships at the moment in Bangladesh and Africa. And in fact, hopefully, if these are sorted out and these actually materialize, we will be seeing a decent growth in this year as well.
Okay, so you're expecting a decent growth. Can you quantify that decent growth?
Well, it's too soon, very honestly, but we do believe it has the potential to grow at 15-20% year on year for the next few years.
Okay. Just a quick question before we let you go. It's a two-part question. You have cash on books as well. Are you looking to utilize that in terms of any kind of acquisitions that you might have narrowed in on? And secondly, what would you guide in terms of margins? Because at one point in time, your margins were at around 20-odd%. When do you get back to those levels?
So look, we do believe that we are we have a very strong balance sheet as we speak right now, and we are continuously evaluating opportunities. And now more so because our hospitals business is already doing an ROC of between 17 to 20%. So we are quite happy with that, and we feel that it is a good time to add more capacity. So yes, if there is any inorganic opportunity, we will be looking at it, and if that materializes, that will add to our top line numbers, which with the current kind of guidance, we've not kind of included any kind of inorganic growth that might come in. So which is one, and the other one is yes, the margins. Yes, we do believe that the hospital margins for this year will be 23 to 24%, and
Right.
and overall at the group level, they'll be at 20-21% because the implant business will have a single-digit kind of EBITDA margin for the year.
Okay. All right. Take that point, Shanay. Thank you so much for joining us and giving us details of this new tie-up and the business outlook going forward as well. That's the word coming in from Shalby. The stock was buzzing last week, up anywhere between 15 to 17%. Today, it's down around 2-odd%. Time for a break.